Good evening, guys. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi asset and multinational hedge fund. By multi asset, I mean we actively cover multiple asset classes, which includes precious metals, base metals, agriculture commodities, foreign exchange, and many more asset classes. By multinational, we mean we cover our positions in United States, Europe, and Asia Pacific region. But having said that, and like I repeated many a times, and I would continue to repeat, that we are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our fund. Treasury Consulting and our entities do not seek any third party investment. Please take a note of that. Guys, being a hedge fund, being in this industry, I regularly interact with the financial institution. God is really kind that even my almost 10 years of career as a corporate treasurer, I interacted with top financial institutions. You name the bank, and I did interacted with them, which includes Goldman Sachs, JP Morgan, Citi, Standard Chartered, UBS, Barclays, Deutsche, RBS, mutual funds, depository financial institutions, and today running my own hedge fund, so I interact with them on a daily basis. Guys, in the last several months, I am finding a little weird thing which is happening in the hedge fund industry. Little weird thing. Unfortunately, I not expected this to happen, but what can I do? This weird thing is happening, and unfortunately, I am finding out that this is growing also. So, to be honest and precise, I won't be quoting the name of any hedge fund in my videos, but I am giving you appropriate hint. If you are an intelligent person with IQ of greater than 8 out of 10, you would get to know which fund I am talking. Now, first of all, we need to understand that there is no unanimous definition of hedge fund. Unfortunately, this is a very wrong precedent, let it be honest. In the world of machine learning, artificial intelligence, robotic technologies, robo advisory, there is not a unanimous definition of a hedge fund. But yes, one definition which you often get, on internet, that they are private pools. Private pools means they take capital from big players like high net worth individuals, probably family offices, ultra high net worth individuals, with due respect, politicians, and many a times the black money earned by the regulators. I know that you must be surprising that why I'm saying black money earned by the regulators. We tend to believe that regulators are very honest people, but they are not honest people because history is witness that 2008 onwards and even before 2008, the regulators whom job to protect the market, protect the money of investors, they blatantly violated the guidelines. They let the crash happen, and end result, the crash happened and billions and trillions worth of money wasted, and these regulators supported few selective financial institution, and let majority of the financial institution collapsed. The prominent in this list is always the Federal Reserve. If you go Amazon and you type Federal Reserve scandals, or even if you go Google and type Federal Reserve scandals, trust me, so much material is being written with facts that you will feel what the hell it is. But unfortunately, media never cover this. And we all understand that. Why media never covers this? Because regulators are the bosses of media. If media start covering the regulator, then the regulator will not let media firm run. So it's a give and take relationship, as simple as that. And the prominent in this list is the Bloomberg, because Bloomberg always hype few selective Federal Reserve members. Whatever Federal Reserve do, Bloomberg is having an inherent job, which is to promote that regulator. So hedge funds are the private pools. That is the unanimous definition of the hedge fund on the internet. But unfortunately, I'm not in a complete agreement with this definition, because now the market is expanding. I would say we are living in a globalized world. We have Reuters, Bloomberg, a lot of terminals and whatnot. Now we have a category of hedge fund, those who are public also. You know, they are public funds, but they are very smart. They call them index funds. They don't acknowledge that they are public hedge fund. They say we are index funds. Beauty. They knew that index funds, either passive or active, is one of the categories of hedge fund. But rather than telling themselves as a hedge fund, they call them as index funds. This is the beauty of life. One trend which is shaping the hedge funds very recently, and from the last 5 6 months, I am noticing this trend on the Google. But you know that schedule is very busy. I am not getting much time to make videos. You know, so that trend is that hedge funds are moving from financial centers to offshore financial centers. And I think I should correct myself. Rather than using offshore financial center, I should use a word tax havens. I'm noticing that in the last 5 to 6 months, the top hedge funds, I'm not quoting any name, they are shifting from the, I would say, from the financial centers like US, Europe, London, Singapore, and all these financial centers to tax havens. But there is another beauty in the game, and that is more beautiful than what I told you. That beauty is they are not shifting completely. So you may see a hedge fund who would continue to have office in New York, probably Manhattan, probably Zurich, probably, I would say, uh, Greenwich, probably Mayfair in London. But they would shift the liquidity. That's more important piece, because the liquidity is something that drives the hedge fund. Hedge funds have power to move the market. Unfortunately, in majority cases, it is misused, and history is witness that they being fined also by courts many times. And what they are doing, they are shifting the liquidity. I repeat, they are shifting the liquidity from the, I would say, from the global financial centers, where at least on paper we have scrutiny, regulators, media, we have all these things, magazines, newspapers, and all, to tax havens, so that whatever they do, it cannot be caught. And that is the beauty I am watching from the last 5 to 6 months. This is the beauty. The world of financial market is very much connected, and we are idiot number one if we feel that it is not connected. Even a simple Comex platform, without quoting any specific name of a Comex platform, even a simple Comex platform is very much connected with the hedge fund. Very much connected with the hedge fund. You open your Comex platform and you place your order, assuming one lot, you need to buy one lot of gold, assuming, simplistically speaking. You feel that you are interacting with the Comex platform, but you barely, I would say, you barely having an idea that you are actually interacting with a hedge fund. You are not interacting with the Comex platform, you are interacting with a hedge fund. Similarly, ECNs means Electronic Communication Network. This is a new breed in the financial institution and it is shaping up. You heard me very right. It is shaping up, and fortunately or unfortunately, I know that I used both the words, fortunately and unfortunately, their shape is not in the benefit of the society, unfortunately, to be honest. But anyways, we will discuss this later. Electronic communication network, I have planned some detailed video in that regard, so that I'll talk later. Today, whether you are dealing with a Comex platform or you are dealing with any ECN, which is called electronic communication networks, or you are dealing with any algo traders means algorithmic traders, you are directly or indirectly interacting with a hedge fund. And how you are interacting, because the orders which you are putting, these orders are moving to the hedge fund, and hedge fund plays a contra orders in that regard. Sometimes they go in sync. So before I elaborate, let me, I would say, give you an example. Suppose there are 100 comics platform which are working in the world, assuming 100 comics platforms are working, and suppose at a given period of time, assuming 1 million gold orders hit that comics platform. 1 million. When I say 1 million, I'm not talking about the dollar figure. I'm talking about I would say, I'm not talking about the dollar figure. I'm talking about the count. Please do take a note of that. I'm talking about the count. Suppose the 1 million gold figure is hitting the comics platform. Let me give you a simplistic example. These 1 million gold orders will immediately go to a hedge fund. Now, I'm not saying that these all 1 million go to a single hedge fund. No, it may go to one hedge fund, it may go to two hedge fund, probably five hedge funds. That's all depend how professionally these comics platform are connecting with the hedge fund. Professionally, please take a note of that. And why did I use word professionally? Because once they pass the orders, they charge something which is called swap charges. In our parlance, we say swap charges, which means suppose 1 million orders I would say, they are putting in the system, and they are getting 2 cents. Just take a simplistic example. They are getting 2 cents out for per order. Then 1 million into 2 cent, it's enough money for that comics platform. Let it be honest. We all know that people lose in trading. So what they lose, this is what the gain of the comics platform, that is separate. Do not count that. Now what these hedge funds do, these hedge funds are connected with operators. Though on my YouTube channel I did explain operators 100 times, but let me explain again here in this video. Operators mean they are those people who manipulate the market. If you are thinking that operators only perform in India, then you are mistaken, because operators perform almost everywhere in the world. In fact, if you think that Singapore is a global financial center, then you should also aware that Singapore is a tax haven also. So Singapore is having two images. One, which they show on TV, media, newspaper, magazines, journals. Second, which most of the people do not aware this about. If you think I am wrong, then please open Google and check yourself that Singapore is one of the leading, I would say, one of the leading tax havens in the world. And I don't think I need to explain what the hell is tax havens. Now, these hedge funds are interconnected with the operators, and the operators give the direction to the hedge fund whether they should be putting the contra bet or they should be putting the inflow bet. In our parlance, contra bet means that if people wanted to buy gold, they create reverse leg, they sell gold. If people wanted to sell gold, they create reverse, they buy gold. Inflow leg means when it moves, they wanted to buy, hedge fund also buy. They wanted to sell, hedge fund also sell. This is inflow leg. Why operators hold a huge amount of money? Recently, we saw, and this is now a legal case, that JP Morgan Chase. You name a fraud which JP Morgan not did. This should be a case study in the Harvard University, that name one bank who not left any fraud in the universe. And with closed eyes, you can say it is JP Morgan, because there is hardly any fraud JP Morgan not did in the last several years. Before 2008 and after 2008, JP Morgan name regularly coming up in the public. Sometimes money laundering, sometimes the cheating, sometimes manipulation, market rigging. You just name it, and JP Morgan Chase name is coming almost every month in the media. And the beauty of the game is JP Morgan Jamie Dimon is continuously invited by these media institutions, specifically Bloomberg, I would say, these conferences which are happening worldwide. Very recently, I have seen him in Saudi when he was invited in a conference. He is regularly invited on a TV shows, and he is giving lot of gyan to the people. So they are the people who actually do the market rigging. United States court accept and acknowledged. I'm talking about court. United States court accept and acknowledged the fact that yes, they not only manipulated but spoof. Spoof is a very heavy word, I would say. Spoof is a very heavy word, and there are various methods of spoofing, let it be honest. US court acknowledged that JP Morgan did spoofing not for 1 day, 2 day, 3 day, they did for years. They did it for years. So you can easily guess that how much money they earned out of it. If you are doing the spoofing for years, you might have made several billions dollars, which are probably unaccounted money. So these hedge funds are also connected with the operators. And please do take a note. Please do take a note that it is the operator who takes the final call. And how do operators take a final call? Because operators are connected with their clients. And these operators committed a very extensive returns to their clients. They committed returns which are beyond imagination, beyond textbooks, beyond dreams. And these level of returns can only possible provided you manipulate the market. Because honestly, these level of returns are almost next to impossible. So once you manipulate the market, you move the market in your direction, the level of returns is possible. To conclude, once you're doing hedging with a Comex platform, probably ECN, electronic communication networks, they connect with with hedge funds. Of course, on a professional ground, and this is called swap charges. And these hedge funds are further connected to operators. And operators are big people. Why they are big people? They are the ultimate decision maker. They decide where the market should be. And please do take a note that operators never come in the public. They never come in the public. You will not be able to see them on, I would say, on media, newspaper, magazines. You're not been able to see them, but they regularly watch market. They continuously place their bets. So they play with the people money. They never play on their own money. They play with the people money. And that is another beautiful and interesting fact of the life. We have tax havens, and nowadays, somehow or not, I'm getting a sense that hedge funds have started moving to tax havens. So, of course, they continue to maintain their offices in the financial centers to make people fool that they are operating from financial center, where we have regulators, scrutiny, auditors, rating agencies, media, and all these things. But the hard reality is that actual action, which is called liquidity, is moved to tax haven. You must be thinking that how come, what is the significance of that, and how would we able to predict this? To be honest, I can't tell you how we can predict this, because this is something which is confidential. Years of research is required, experience and all. But yes, what I can tell you, that what is the significance and the economic cost of that. I know that in 2018, when I predicted SoftBank, people laughed. They send me the messages on the WhatsApp. And today, when the same SoftBank is collapsing, they all are silent. And today, I'm telling you that in the upcoming time, probably another 3 4 years from here, we will see heavy volatility in the market. Now, this heavy volatility, the word which I'm using, of course, one factor that play is the interest rate which the central banks hiking. And on time to time basis, I'm making videos as far as this interest rate and the impact is concerned. So that is one thing. But another beautiful thing behind this actual volatility, rather implied volatility, is that the liquidity shifted to tax havens. So let me give you a simplistic example in that regard. I will not name any fund house, but I have given you appropriate hint in my videos. So if your IQ is greater than 8, you would be able to get to know which fund and which structure I'm talking it about. Suppose the private investors, which includes family offices, high net worth individuals and all, suppose they gave $2 billion to a hedge fund, assuming. By the way, 2 billion is a very small amount. Let it be honest, because hedge funds operate on a very large amount. And out of 2 billion, the hedge fund puts around 500 million in a tax in financial center like US, Singapore, London and all. And rest 1.5 billion they put in a tax haven, which could be Caribbean, which could be Cayman, which could be British Virgin Islands, and whatnot. And suppose out of 1.5 billion, they are placing some big bets in the market. And let me create one bet for you, which is that, two things which I did notice very recently. Federal Reserve last week hiked the interest rate by 75 basis point, which practically means that, and Federal Reserve was very clear even at that point of time that they would be hiking the rate. Probably in future also, you would see another 75 basis point hike. And let it be honest that it's a stupidity, but I'm not covering this. I have covered this many times on my YouTube. Now, when Federal Reserve did that, the gold was around 1650, 1650, near about. And one day after this meeting, gold went 1624. 1624. Congratulations. There were enough, I would say, speculation in the market by media, by so called TV anchors, and all these people that Now gold is breaking 1580, and from there it will go 1550. And I was laughing, standing on my computers, my trading terminals. I was laughing. I was like, okay, let me see how it goes to 1580, because I know how the cycle works and each and everything. From 1624 to, as we speak, around 1690. Around 1690. How the people place the short bets in the market, whether this is a Comex platform or an exchange traded platform. I know that because media created a hype and people put the short bets. In fact, I personally know few people, those who were thinking about the short bets. I want them not to go, but you know how it works. Now people put the short bets, and when these Comex platform contacting hedge fund contacting operators, these operators went reverse. They created long bets. How it works? Just take a hypothetical example that the total volume of the short bets is 1 million pair, assuming, simplistically assuming. These hedge funds created 2.5 million pairs reverse in the market on the long side. Why? Operators want the gold to be higher. What happened? Short bet to long bet ratio is greater than 1, rather greater than 2. Automatically the market move up. What happens? People who shorted, they lost it heavily. Few people who short at 1624, they might kept their SLs, stop loss at 1630. Few kept 1635. Few kept 1650. As soon as your stop loss breaches, you winded up your transaction. Simple. You winded up your transaction. When you wind your transaction, the actual benefit would always be that Comex platform or the ECN platform. So in this whole transaction, who won? The actual winning player is the operator and the hedge fund who created the contra bets. And guys, do you know that the liquidity is actually driven from offshore rather than onshore? And how do you know about this? The time. I don't know how well versed you are with the offshore financial centers. I don't know about this, but just a hint I'll give to you. Take a calendar, probably a calculator, probably a watch, and just compute the morning timings of our tax havens, and then see and correlate this with the US timing. You will get a very beautiful correlation, which is difficult to drive because you need years of experience, expertise, you need this skill set to understand and all, but you will get to know that actual liquidity is driven from offshore, not from onshore. This is one of the ways how you drive that. There are many other better ways you can drive this more accurately. To conclude this whole story, I strongly feel that if the hedge funds continue to move offshore, and I do see that this trend would continue, let it be honest. In this eventuality, the Russia Ukraine war, all these factors are separate, of course. But the level of volatility, which is called jumps, would grow. And this is what it is happening in the commodities market, in the foreign exchange market, like Canadian dollar. See the level of volatility in the Canadian dollar. And I'll have separate video in that regards. But being a hedge fund, I thought let's cover this video in detail. It's around 30 minutes video which I covered. But I would like to thank you to the Lord for making me understand that how the thing is happening. Anyways, this is Rahul Magan from Treasury Consulting Group. You knew my personal number +91 9899 242 978. +91 9899 242 978. Before I wind up, I would like to thank you to my Lord who is in the sky for making me intelligent enough to understand these idiocies which are happening in the world of financial market. I don't know how should I explain this, but whatever we are learning in the books, probably in MBA institutions, probably in management courses, this all is a waste now. That's what I can say. Because the actual market is far, far, far away from what you see in the books. This is what I can say. Anyways, this is Rahul Magan from Treasury Consulting Group. Have a great times ahead, guys. More interesting videos on the cards. Thank you.